It's not often as traders and investors that we see such a huge event, one stock holding the balance of whether markets will squeeze or crash back down to mean reversion. In today's video, we take a look at what the options market thinks is going to happen next. And of course, we break down some of the hottest markets around the world and the key opportunities that we could be looking at. There seems to be a few squeezes out there, so let's get into discussing stocks, commodities, and cryptos together right now. Well, welcome back, guys, to The Daily Show. My name's Tom, and as always, we're going through the macro, the data, and the charts that you need to be watching together. If you've ever asked yourself the question, why is the market doing this, and you're left scratching your head, then remember subscribe and smash that bell icon as we go through bringing the simplicity to the complicated every single day here on the channel. So let's start off with the WTF moment, look at some history, and then of course check out NVIDIA ahead of the big earnings. To start off with here, I want to talk about best trader of 2024. Could it be that Nancy Pelosi is number one, going past 250 million for the first time and making 10 million alone in this month? It's clear that she has some information, and I'm sure a lot of us would love to have some of that or be a fly on the wall sometimes. Anyway, is it ridiculous? Most likely, and I'm sure you all have your opinion on that in the comments down below. Tight credit equals low VIX. Now, I thought this was a great chart just to have a quick discussion about because a lot of people are making a huge deal over the VIX being so crushed, and it generally actually does spend a long time under the 20. It's pretty normal. And when you're under 20, you're basically in what you call a bull market. So of course, there's not much volatility around. People are, basically thinking that it's all good, all fine. And then eventually you will have huge spikes in the VIX. Now, I thought this was an interesting chart because actually the most dangerous area seems to be around 20 to 25, with more negative correlations coming through on the markets during that period. But as you actually go up through the VIX, especially into the 50s, you tend to have incredible returns on the market. So that's that buy fear, as Warren Buffett says. And of course, in terms of greed, it doesn't really say that this is huge amounts of greed, but you will be timing the VIX with, of course, some price action-based reasons. Interesting chart here from Strategus. Now let's move over to financial conditions. As we know, that chart says financial conditions credit might be tight. We know that the Federal Reserve is claiming that with all of their discussions, and the meeting minutes are coming in less than 24 hours. But really, financial conditions have been softening. So basically, we're getting looser conditions, probably more dodgy debt being written, and ultimately something is going to go bad. But of course, we need to think about when is this going to happen? And we'll start off here with looking at the soft landing kind of concepts. Now, of course, a year ago, everyone believed hard landing and recession was coming. That didn't eventuate. Now everyone is thinking soft landing is coming. That's probably not going to eventuate now. But let's have a look at the major factors of how we're tracking so far. So funnily enough, we are actually tracking very, very similar to a couple of periods, 1994 in particular, and of course, then there is 1966. Now, let's look at the 1994 kind of candidate first, the dot-com boom. Ultimately, could we be seeing some kind of similarity? Of course, we have an AI boom here. Well, NVIDIA and its forward guidance might tell us a little bit about whether this market wants to really do some ramping. But I thought there were some interesting factors here that we get an extreme growth period, which obviously a new high kind of does point to, and it goes kind of ballistic with everyone going into euphoria. Now, in the 1966 standpoint, there are some interesting facts. Let's actually overlay them here together. And this is a great chart from Jurian Timmer over on X. You can follow him if you'd like. And basically you can see here 1966 versus the 2022 kind of chart. And when we overlay them, or he's done here, you can see that they kind of go for a little bit longer and then they enter into a recession. Then we get a secondary recession a few years later. And of course, this is because we entered into the period of stagflation. Now, generally with stagflation, the way you look at it is you've got inflation going up and you've kind of got like worsening economic conditions. So basically, economy is not really growing, but inflation is still going up. And that usually leads into some of the main candidates going, which is gold, commodities, metals, and of course, anything to do with inflationary kind of aspects. So are we seeing that right now in the economy? Well, yes, we are. Of course, copper is leading the charge, and we've been discussing that concept. And it is arguable to think that maybe stagflation, or at least the market's starting to sniff out stagflation on the horizon. Now, in that particular scenario, we could be leading into this type of thing. But my most likely scenario is something we'll discuss a little bit later on in the show. Let's have a look at some other stuff before we get into NVIDIA though. And of course, sentiment indicators are important. This is a Goldman Sachs equity positioning indicator, and it shows that we've got stretched equity positions. So what this really tells us is that we should be starting to see some further volatility come back into the market soon. And of course, this was one of the indicators that we used back in March, along with, of course, our bond indicator and bond options to see that there was some vol coming back into the market, which gave us that little bit of a pullback. Now, NVIDIA, I think, will ultimately be a big catalyst point here, but we do need to remember that we've seen quite a lot of new highs this year. So that tends to mean that the market does still have this kind of what you would call animal bull spirit. 24 highs this year. We're on track for kind of one of those record style years, 61.7 according to Ryan Detrick here. And you can see that effectively it's telling us that the market, when it makes these highs, it does tend to do more of them. So even with pullbacks, they're probably going to be met by bull demand and euphoria, at least for now. And we'll go through some overlays in a moment. So as we know, we're in earnings season, and so far the earnings season has been pretty good. In general, the stocks that needed to hit have hit, and we can see here that there's some generally pretty good boding for future earnings. And we also know that NVIDIA is going to be the most important one. So we asked you over on X, how do you guys feel about this? How do we all feel about this? 77.9% of you responded with NVIDIA will beat earnings. Only 22.1% said no. So will you be correct? Well, it's certainly a very interesting one. This is a T3 Live output here over on X, and it just kind of goes through NVIDIA's earnings cheat sheet. And you'll notice here, when we're taking a look at what to look out for, I think there are a couple of important factors. First up, there's going to be the options market expectation, which we'll look at in just a few moments. Secondary, we're up 92% on NVIDIA year to date. So it's the number one stock in the queue, and it's the number 3 in the S&P 500 overall. We know that generally speaking, there's some expectations of some incredible growth when we look at it, and 2025 estimates will be in focus because you can see here, look at these huge numbers, plus 96%, plus 86%. It's going to need to give incredible forward guidance. Analyst ratings, 48 buys, 4 holds, 0 sells, and everyone seems to think it's worth over $1,000. So let's have a look now at what that means in terms of options markets. And of course, if they beat and if they miss, what could occur. So firstly, a stock must be beating on both at the moment. If it's not beating on both and it's missing on both, they are getting dropped big time. The average has been very, very fierce, 3.5% down if you miss on both. And I'd expect NVIDIA to be way more wild. But this is the track record of what NVIDIA has generally done. I thought this is a great one here from Earnings Watcher. And you'll notice that in general, the pre-release move has been kind of subdued, sometimes even a bit more negative. And then the post-release move has been, all over the place. But the move day of release. Now, this is the interesting one. So, of course, we've been getting some huge upticks in the recent ones. 20%, 15.1, 3.4, 16.5, and only one negative out of the most recent earnings results. So is it a big announcement? Absolutely. Does it have usually quite a lot of days in it? Well, generally no, because you can see here the move duration days, usually around 1. So whatever happens, it's going to be quick, it's going to be sharp, and it's going to go straight into that next resistance, you would think, as soon as it comes out. So where is that resistance? Well, it's $1,000 basically on the top end. Why do we know this? Because, of course, that's exactly where all these calls are into the 24th, which is this Friday. If we manage to get through 1,000, then you'd probably say we're in an incredible positive gamma situation, and we'll probably continue to see a bit of squeeze. But 1,000 is going to be the magnet on the bull end. And on the bear end, you'd think somewhere around 900, even down into maybe the 880s is going to be kind of where the options market is kind of predicting things. So 950 being a base at this point, 1,000 being the critical res, and through 1,000, well, then we'll have to see a lot of analyst upgrades. So the options market is basically saying if anything good comes out, it's going to gravitate towards that $1,000 level. Now, is the market actually already suggesting this? Well, yes, if you looked at it on price action, it's making a series of higher highs and higher lows, and that is undoubtedly a bullish trend. So as we mentioned before, 880 being a key level, because if it does come down, that's the major support or demand zone. It also just so happens to be an anchored VWAP zone. So there's a lot of confluence around the 880 zone, including some option stuff. And from the $1,000 price range, well, of course, it's that technical price, the options price, and a key kind of resistance. A lot of people love taking profits at round numbers, so 1,000 will be a big zone. How I really see NVIDIA playing out is it's going to be a wild move. Obviously, the earnings call is going to be the most important factor because that'll be where they're talking about a lot of forward stuff. And I think the market is going to just instantly hit into one of these key majors, whether that be 880 or 1,000, which makes it a difficult trade unless you have a very key point of what you think it's going to do. Would you be terrified as a hodler? Probably not, because of course, even at resistance, it is technically showing signs of bullish action when it comes to the series of higher highs and the anticipation there. So there's no doubt that NVIDIA is going to be one of the most important earnings releases, but what about other opportunities out there in the markets? And are we still heading for a pretty good bull market run? Well, in general, emerging markets are, of course, a big discussion point recently, with Risk Premier basically looking at seeing the emerging markets becoming much, much more desirable compared to the domestic markets around the world. Basically, if you consider excess yield, investors, risk of holding, all of those things, emerging markets basically haven't been this good for quite a few years. On top of all of that, US equity mutual funds are kind of heavily invested already. You can see that they're already down to very low cash holdings. So I think funds will be starting to do a lot of rotation throughout the next year as they move towards trying to get more value out of the markets. And we can already start to see with that, with some big moves into things like utilities starting to come through, especially in 2024. Now, one thing that's interesting about utilities, it tends to be a late cycle investment, which also tends to go into the rest of the world. Emerging markets happen at around these times. So clearly the hunt for superior returns is starting to happen from mutual funds. And they're also pushing this idea that if we're going into stagflation, that emerging markets might be one of the most interesting components because it has 100% track record during stagflation or high inflation kind of results and points. This is why utilities are going. It's why commodities are going. It's why gold is also starting to achieve really good extras. So the market then comes back to, are we still in a bull run? And in general, you would have to say yes. The median duration of a bull cycle tends to be around 31 to 33 months. And in general, you don't really need to be super terrified until we enter into that 39 to 43 month run. So that's when you're starting to say, well, it looks like we've been in a pretty good run, especially if we're still inverted in yield curve, which basically means US 2Y is inverted against the US 10Y, etc. That's going to be a very, very, very big warning sign for markets. So, of course, are we still in a cyclical bull market? Well, the results seem to suggest yes. However, if you do look at it from an investment perspective, considering the high forward earnings, considering the hype and euphoria that's in this market, if you're looking at a 10-year time horizon, which is a very long period, it does tend to suggest that there could be what we call a lost decade on our hands. Effectively, returns expected to be 0% holding the S&P over the next 10 years, which is almost unfathomable when you think about it. But what it suggests is that there is a recession or something worse coming sometime between now and 10 years away. Not very helpful, but what it does tell you is that you don't necessarily have to have FOMO, and I think correct selection is going to be the most important factors. So let's take a look at how the day ended up panning out ahead of the NVIDIA earnings. We had utilities up, solar up, which is really nice to see, and financials making a recovery. Probably of note, the worst thing to see down was home construction. Gold giving up a little bit of gains, but let's be real, it's had a very, very good 5-day run. And when we take a look at it, you'll see it in more perspective. Again, probably the most notable one that's getting a little bit beaten up right now is home construction. So if that continues to see, or home builders, if that continues to be kind of negative and we still see this defensive move in markets, that will be an important factor. So let's now jump into the charts. And of course, the first one to discuss has to be the S&P 500. One of the big things that's going on right now is we're still seeing a series of advances over declines. And when we see this advanced decline line going up, it's hard to be too bearish. I will note that we got a star over the last 24 hours, which kind of points towards us being a little exhausted on this V-shaped run. And that could mean that little pullbacks back into levels such as this, which would be around the 5,200 level, could be in order. And it would be totally normal for a market to do that after having such an epic run. Now, what ultimately is going to be the deciding factor of that? Well, it comes back to the US 500 and the NVIDIA earnings. You can see putting pressure as it slowly melts up. And I kind of expected a bit more res around this 53.25 as we saw call resistance here for multiple days in advance. No new low though, so still series of higher highs and higher lows as we make it on the way up. And if the market keeps melting up this way, next stop, probably 5,400 according to the options. From the sell side, where are you starting to look for weakness in markets? Probably not until you get underneath the one-day options expected move. About 52.80, that'll trigger off sells. And then generally speaking, we're looking at 52.50 and 5,200 as the next major buy zones for intraday and day traders. So US 500, plenty of opportunities, but for now, even the bears don't seem to be able to fight it off at this level. This is pretty much where I expected the bears to be. I expected maybe a nice little pickup at around 5,300. That's possible from an NVIDIA earnings like this. But if we get underneath there, I'd say this point and this point become very likely, with 5,200 being the best of the bull zones moving in the smaller timeframes. Let's jump on over to options, see whether that agrees with the situation right now. Of course, positive gamma, guys. What this tells us is that markets are in the squeezy squeeze. Most of 2024 so far has been positive gamma, except for that little pullback we got of 6%. So this really says that if we go through 53.40 after NVIDIA earnings, then we're pushing, and we're more than likely going to push towards the 5,400 range. So this is going to be a huge deal, and you can see 5,400 becomes the most liked strike in June. So the June OPEX, 5,400 is the most liked call. And really, if the longer we remain above 5,300, the more likely we are to gravitate towards that zone because of the positive gamma situation. CTAs, what's going on with commodity trade advisors? Neutral on the NASDAQ, neutral to down on the S&P. And of course, Brent also showing really worrying signs. So CTA is going down, even though we remain kind of stagnant around this level. And as you would notice, oil has not really been playing the game that we like. It's been hitting the level, that's good, but we'll break it down in just a few moments for you. Also, some other notes, Tesla on the squeeze, 185, now a big level to break through, get through 185, push to 190, push to 200, etc. We're in a positive gamma environment again, once and truly. And once we got through 180, 185 was always the next level. And it's great to see the options moving this way. So we push through 185, most likely going 190, push through 190, going towards 200. So it's really playing that options game. And you'll notice on the June expiration, there's huge amounts of puts really giving a lot of support to that 170 to 155 range. People very negative on Tesla, and probably rightfully so at some points here, but the market obviously started to squeeze after Elon put the AI trick in, and that's exactly how we've found ourselves so far. So really the puts acting as a decent amount of support. When we take a look at what's going on with GameStop, you'll notice here that 22 becomes a pretty big call level, and we remain above that for now. Spot prices at 22, current options sit between 20 and 22, and quite a lot of calls coming through over the last 24 hours. Again, pointing towards the positive gamma situation and also a squeeze coming back through on GameStop. So I think 20 is a good temp base for that stock if you want to look at it, although, of course, as always, it is a bit of a gamble. When we go on over and have a look, we've got NVIDIA now coming after the close on Wednesday. That's the big news. And as we know, the options market expects it to be between plus kind of 9 to 10%, although that has changed. And I think we're sitting between 7.5% to 8.5% now. So it was higher leading into this week. It's now come down. Either or, it's going to be hundreds of billions of dollars of transactions. So we're going to get a lot of movement in the markets. This is the biggest earnings result this season. And of course, you'll need to be paying a lot of attention to it. So let's jump on over to the charts now. We'll begin with the VIX. VIX hitting our watch reaction here level right on time just before NVIDIA earnings. You have to think now volatility will spike from this point. It's strange to see the VIX so low coming into, of course, now the most important earnings season result. So I would say the VIX will spike off this area. It's exactly where we wanted to get it to, 1184. And considering the stretched positioning, as Goldman Sachs said before, maybe some volatility is just around the corner. What about options market and bonds? No suggestion here of volatility. If we go through some other warning signs, of course, home construction starting to look a little bit dodgy on the charts, but still not enough to write home about. And yields still stuck between 5 and 4.7. So nothing much going on there in the charts. Same with treasuries. They're going to just hover in between. But we do like, of course, down here in the 88 base, which we always have. And we kind of think that it's going to do well. It's going to perform okay. But of course, it needs the Fed to pivot and start to cut rates. And at this stage, it doesn't look likely they're going to be able to do that just yet. Meeting minutes coming out, though, on Wednesday as well. So that will be an important factor for treasuries. What about copper? I do tend to think it's exhausted on its initial move. Obviously, if you go over a 12-month period, I think it'll be up. But right now, it's exhausted. And you can see here, there's all these wicks and it's kind of like slowly grinding higher. I think a lot of the metals market, heaps of people have been interested in it. Everyone's jumped on board the bandwagon, and that's leading into copper, gold, and a few others. While very, very strong asset class or assets overall, I think they maybe hit some temporary highs for now, at least in the day trading aspect, not in the investing aspect. What about US dollar? Up, down, all around. No real movement or change from here. We still maintain that 105 could be where the res is. We're looking for a new low here to trigger in further shorts. And for now, no real change to the dollar. So no movements over the last 24 hours, guys. Gold, as we mentioned, starting to get that red stop sign here, really just showing us a little bit of exhaustion. You can see similar exhaustion reads than this. Some of them, they still push, but this was different. It was a breakout. This one here, sideways action. This one here, bit of a pullback. This one here, to be determined. But as you can see, when I get these exhaustion reads, I tend to just take the gas off the pedal a little bit, or take the foot off the pedal a little bit. And you just want to be kind of looking at it with a little bit more skepticism around these points. And the same thing goes for silver, another very extended run. Great squeeze, don't get me wrong. I think silver's going to $50 overall, but of course, just looking at it a bit cautiously now. Now we move over to oil. So pretty ugly looking chart. It's come back to our Great Bull Zone, which of course we liked here. I liked it here as well. And the price was right, but now it looks really dodgy. With the CTAs also dropping the position in recent times, it does look really dodgy. Some people are saying, is this a flag towards the downside? Or is it some type of head and shoulders towards the downside as well? So let's just zoom out and have a look at those scenarios. So of course, if you believe it's a bigger head and shoulders, then that's pointing towards, 68 a barrel. This is a political game. OPEC expected to come out in June with their decision. It is possible that we're going to float around in a sideways market until then. So I think, oil, this is the thing about trading. You've got to remain a little bit flexible with what you're doing. We wanted it to close above the 20 because we knew the 20 was a huge point. It hasn't been able to do that. It's back down to the area where we were entering into the prices. So really, it's kind of like break even. And I think it's not the same as it was the other day. But this one here, I would say completely neutral on it, if not even bearish. Because got to remember, the trend coming in is quite negative. So we'll end up finding out, but not happy with the closing right on the Great Bull Zone level. And until this thing breaks up above here, I'd have to say it could even be doing this first, which is a short into a long. So more reaction needed on that one. Tesla now, really nice squeeze, pushing into the 185 zone. Obviously a huge candle on it. Some good news coming out about China, FSD, et cetera, et cetera, et cetera. But with Tesla, as we know, it's all about really getting that market to get hyped up. And of course, we're starting to see the calls arrive into it. If we keep holding above 186, considering the close on the high, we could be pushing into the 200 bracket relatively soon. And we saw that 190 and 200 are the major key res levels. So I think that, considering the close, it's pullbacks being met with bull demand and certainly some aggressive action from Tesla over the last 24 hours. As we mentioned with GameStop, 2220 being a major support. You can see here when we look at it, you can already tell there's a buyer here because the wicks keep purchasing up. So I would say that there's a buyer here. Someone's trying to squeeze from this level. It could be a resurgent squeeze. They are very risky trades. And as you know, what's this stock really worth? Some of you are going to argue a lot. I'm going to argue it's worth probably about $4 or $3. So, or maybe even nothing. So realistically, at 20, you're playing the game of you're hoping the squeeze comes back through. But nice wicks there, and a break above 23.50 could certainly start something serious again. Hood, one of my favorites at the moment. Really nice exit here from the previous week. You can see holding very nicely, beautiful weekly closure. And I think hood's got a bit of runway on it. So when you look at it from the cup and handle perspective, it could be looking at 36-ish on the charts. I asked you guys over on X. A few of you had some big targets for it. So very interesting one on the charts. And starting to get quite a lot of options discussion as well. NVIDIA versus Intel. Intel, of course, the worst of the stocks in general, but holding that 20 moving average. If NVIDIA does well, possible for things like SMCI, Intel, etc. to start to ramp up. And of course, Intel trading just below that 20 moving average. So could be a breakout to see a bit of a dead cat bounce for that particular trade. Chinese stocks now, really great run. I expect them to kind of pull back. I wouldn't be surprised at all to get an 18,400 for Chinese stocks before they go towards 20 plus. And look, still bullish on them, but yeah, incredible run. And I would say someone started to take some profit on these on the smaller timeframes. Aussie market doing really nicely. Metals, financials, and energy. The combo of 2024 since March really doing very, very nicely, or mostly since May, I guess, for this market. So again, could we be looking at all-time highs on the Aussie market? I think so. And for the Australians out there, it's very possible that we could be hitting a 9,000 over the next year or so. So things are looking a lot better for the Australian market, being filled with those types of companies. US 2K, of course, Druckenmiller, Stanley Druckenmiller, picking this one up famously recently. And you can see it's coiling. So could NVIDIA be the catalyst? It could be. I think it's a bit early to tell, but it's an interesting one with more upside potential than, of course, the other two major market indices, including the NASDAQ right now. And as you can see, the NASDAQ is also giving me overbought signs. So what it's suggesting is that we're in kind of like a market that will generally go more sideways or even pullbacky here. At least that's the stats. And I think you've just got to be a little bit careful about getting in on huge bull runs here, in your opinion, because this is that point where I like to look for a little dip to get in or a little pullback sideways. And that's very different to where we were just the other day. But NVIDIA will ultimately be the decider here. It seems like, according to at least the indicators, it's setting up for a little bit of a pullback, but forward guidance will be key. Most people are incredibly bullish into this NVIDIA move. So is that wrong this time around? No, I think it's a crystal ball of guessing. So in general, if you're bullish and you're long and you've got a bit of high horizon here, I think there's nothing wrong with that. And the action is still higher highs and higher lows, with really the big kind of action, even if it does pull back, to be met with, you would think, bull demand around these anchored VWAP moving average kind of zones, similar to the S&P 500. So on to crypto now. Of course, Ethereum running high and hot, breaking through that key resistance, really showing that it's trying to play catch up to Bitcoin. And Bitcoin, meanwhile, hitting the resistance and selling off. So probably a little bit of a temporary high here for Bitcoin. I could see it going back into the 61.8 of the last pull, which gets us to about 68.2. And of course, this is the zone that maybe we'll start to see buyers back in Bitcoin. Bitcoin hitting a big res. I think it looks pretty good on the charts though. So overall, you'd be bullish on it. And of course, each halving cycle, it's generally had a pretty much an alt kind of month season start that starts around now-ish. So you're probably going to start seeing alts go, especially since Ethereum has been holding so strong off that very, very large move over the last 24 hours. Make sure to look after your positions, guys. Practice risk management. We do have the monetary policy statement or the meeting minutes from the FOMC coming at 2 p.m. on Wednesday. And of course, as usual, subscribe if you enjoy the content and follow us on the socials if you want to find out more about what we do and how we do it. Also, of course, if you want to check out some of our courses and how we create replication strategies, then you can do so. Some fantastic results from some of you recently. Very proud of many of the members out there. All right, guys, thank you so much for watching. We'll see you in the next one. Let's go NVIDIA, earnings call coming. And are you a bull or a bear over the next 24 hours? Let us know in the comments down below.